Hi, this is Clement from Stocks University. In this video, I will explain what a stock screener is and show you my 3 recommended stock screeners. As you may know, there are thousands upon thousands of publicly traded companies which you can buy shares of. This creates an abundance of data and a problem. How can an investor be expected to analyze thousands of companies? Luckily, this is where the stock screener comes in. A stock screener allows us to input certain threshold criteria, such as a minimum amount of revenue or earnings, and it will spit out stocks that fulfill our requirement. This way, we can quickly sift through thousands of stocks and focus our in-depth analysis to only a handful of companies. Our first stock screener today is Fidelity's stock screener. This stock screener has a very important feature for beginners who are making their first step in the investing world. It tells you approximately the relative standing of a chosen company within the world of stocks. For example, if you click on dividend yield, you can see that the menu is divided into 6 categories from very high to no yield, so you can know in a glance if a company's yield is good or not. Now, once you get the hang of the market, this feature becomes less relevant, as you already know what is considered a high yield or a low PE ratio. For the beginner, however, this is a very strong learning instrument. Most of the criteria are locked and require you to sign up, but it's free and no hassle, so there's really no reason for you not to sign up. Our second stock screener is Finviz, probably the most well-known and used among intermediate-level investors. There's a good reason why, as the data is good, the criteria are plentiful, and it's really easy to use. Finviz's biggest asset is that it allows investors to screen stocks by fundamental and technical analysis criteria. On the fundamental part, it has almost everything an investor would look for, including the most popular ratios, profitability indicators, and revenue and earnings trend. The technical part allows for an additional level of screening by performance in a given time rate, volatility, or change from open. All of this packed into an intuitive UI makes for the popularity of Finviz, and it's recommended for the common investor. Our third recommended stock screener comes from Whitecharts. Whitecharts prides itself as having one of the most powerful stock screener available, and I really can't disagree. While the first 2 stock screeners discussed have limitations regarding the available criteria, Whitecharts almost provides a blank page, allowing you to search for an enormous amount of data. For example, Whitecharts allows you to screen for almost any item on the income statement, balance sheet, or cash flow statement. If you wanted to, you could screen by total assets or total liabilities. I know these numbers don't make a lot of sense by themselves, but it goes to show the extent of criteria available for screening here. You can also create your own ratios and formulas and screen with them, a powerful tool indeed. The problem is that while other stock screeners were free, a Whitechart subscription does cost quite a bit of money. However, they do have a 7-day trial for free, so by any means go check it out. In this video, we've tried to introduce you to 3 different stock screeners, all with their pros and cons. At some point or another, every investor has to use a stock screener to pinpoint investment opportunities. Like every tool, it takes some getting used to, so take your time to check them all out and decide which one you like the most. I hope you enjoyed this video, and I'll see you in the next one.